Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Monday, the 14th of March. Starting off with Berkeley Energy, where there seems to have been good progress since that break of the October resistance line there around the 10 pence level. Sideways shuffle across a rising 50-day moving average, which is normally a good thing, and above the initial 2022 peak 15. We're looking for 25 pence, which is that late July resistance line projection from last year. Time frame on that perhaps by the end of next month. On to another stock which is blooming at the moment, Bluerock Diamonds. Here we've had a decent turnaround after the bear trap reversal that we had in December. Rising 50 and 200-day moving averages at the moment, and that's running up into a golden cross. The run up to a golden cross, traditionally the strongest part of the cycle. It seems to be the case that we're getting that at the moment. Target here up to 75 pence, which is a resistance line projection, if I can get it, from way back in the early part of 2020. So 75 pence maybe by the end of next month, especially while we hold above recent support around the 50 pence level. Another stock going into a golden cross as well, the 50 and 200-day moving averages, both rising after that double bottom bear trap reversal that we had for November and January. Moving along to a stock which has been in focus as one of the highlights and stars of 2022 to date. There obviously not haven't been that many stars, but here we had Cloudbreak peaking at 13, then coming back all the way to around 5.25, which was obviously rather painful, but that hit that old resistance line projection, June resistance line around 5 pence, which was our initial target after the break of 2 pence back in February. Next level to look at is around 9.25, which is a resistance line projection from back in July. Above that, then we should hopefully be heading for a retest of the highs. Best case scenario target here over the next couple of months, maybe up to 20 pence, which is that November resistance line projection. But 9, 13 and 20, the levels in play at the moment for Cloudbreak, and a nice bounce off the uptrend, the RSI uptrend line from October last week, just to underline the recovery prospects. Moving on to 4D Pharma. Here we've had a classic falling wedge break. That was versus the 29 pence level, and obviously we progressed very well with a weekly close above the 50-day line at 36 pence last week. Multiple bounces off that bullish divergence line as well, so that adds to the idea that there could be further significant upside, maybe towards the 200-day moving average at 67 by the end of next month, and that's the top of a broadening triangle from December. The small oilers doing well obviously at the moment. Here we've got Egdon, which is up again today. It's above the old resistance that we had for February and the beginning of this month. And the view is that while we hold above 3 pence, we get up to 4.5 pence by the end of next month, which would then obviously stretch the recent gains to a 3 and 4 bagger over the near term. This stage only really back below 2.5 pence, delaying the upside scenario, and that's the floor of the rising September price channel. Moving along to Hemogenyx, which I think I covered recently, can't quite remember, but it doesn't really matter. Here we've got a situation where we bounced off a falling RSI support line from very oversold levels, and now today broken that line of resistance from February at 1.35 pence. Above that, on an end of day close basis, looking for February resistance around 1.8, 1.9, and that would also tie in with the 200-day moving average at that zone. Best case at the moment over the next month or two, up to 2.3, 2.4, which is the top of that broadening triangle from back in October. But obviously we are mindful of the way that in the recent past strength above the 2 pence level has tended to be sold into, but at least we might have a half-penny rally even from current levels. A lot of people taking credit for Igas, but whatever your view is and however you charted it, the current situation is that we're in the aftermath of that break of that September resistance line at 19 pence. That then opened up the prospect of a move to the upper 20s, but we've managed to exceed that, and best case scenario target was up to 41, 42 pence at the top of the rising trend channel from April last year. current situation powered by a golden cross and also by an uptrend line in the RSI window. That bounce there off the line at 20 pence, the last dip to buy into for the shares. Relatively obscure stock next, Neometals, but that's shown on the basis that we've broken the opening range. That was between 71 and up to 86 pence. Above 86 pence, looking for a break higher equal to the width of the opening range, so around 15 pence, which would take us to £1 1 pence. Obviously not much charting material here, but the gaps higher over the last couple of sessions suggest that the shares are ready to make a push to the upside. Orca is next, and here the surprise, I suppose, was the way that the shares fell back so far from that initial March peak at 58, back down to 39, but it was just a bear trap below the 50-day moving average. That's been rising, so dips towards a rising 50-day line tend to be bullish opportunities, and that's so far proved to be the case here. Above 39, we're looking for up to the upper 50s, just taking out the initial March peak maybe well before the end of next month. Another recovery situation is Simec, which obviously has had a rather painful run in the recent past. Here we were looking for a break higher back in November. I suppose we sort of got it, but then we made new lows, narrow new lows there, bear trap below the old 1.22 or 1.2 pence floor. Recent days have seen a vertical break of the 50-day moving average at 1.3 pence. And the view is that at least while we're above the top of the last gap there, the gap down that we had at 1.72, we're looking for a retest of the 2.35 to 2.5 pence zone, which fills the gap back in October. So a little bit more to go there. Very wide basing pattern here, which does suggest that we could actually have quite a decent recovery here if we can get through the mid 2 pence zone, maybe towards that line of resistance that I'm just drawing at the moment in the 200-day moving average at 3.25 pence by the end of next month as a best case scenario target. Good to see Tirupati trying to make headway after the bear trap below the old 64 pence low, went down to 59 point something, but the view is that the next level here is to break 72 pence on an end of day close. If we can do that, then it's back to the 80-85 pence zone. That 50-day moving average especially needs to be conquered relatively soon. Finishing off with another stock which looks like it's finally bottomed out after a lot of time on the back foot. Here we've got Wishbone, the old low there around 7 pence, so looking for an end of day close above 7 pence, which would then hopefully lead up to the resistance line there from back in January. That's at 7 3/4, and that would then take us back to 10. But the main idea here really is that we're bear trapping below 7 pence, and that bounce off the RSI support line could be the first sign that that is getting underway. That's it from me today. More updates tomorrow.